In this presentation, we will continue on with our S Corporation Comprehensive Problem Part 8. We're going to be taking a look at dividend income and interest income and the adjustments for Schedule K. We'll be doing this in Intuit tax software owned by Intuit, which is the owner of QuickBooks. It'll be a similar process for the data input and the processing of forms and other software. You can also take a look at the actual forms we will provide or get them on the IRS website, irs.gov, and enter this information directly into them. Here we are in our 1120S. We're now going to go to our Excel worksheet. Within our Excel worksheet, we've been entering this data, and now we're going to be adjusting it line by line. So now we're tied in within the worksheet in the tax return to these bottom line numbers down below. We're now going to take these adjustments and enter them in such a way that it's kind of like a journal entry, so that we can see exactly what goes on with each one adjustment, and if there's something wrong with it, we can go in and fix it. So we highlighted the yellow accounts here to go back into them. We're now going to be concentrating in on the dividend income and the interest income, which we're going to say is basically passive income. So this isn't basically related interest income related to the business, but basically passive income that's kind of non-business related income. So what we're going to do is have a Schedule K adjustment for them. In other words, the business entity isn't generally designed for investment purposes to be generating income such as dividend income and interest income. Now I'm also going to go back to our open items. Last time we finished up the depreciation. So in the open items, I'm actually just going to cross it out. You may not want to delete it. You may just want to cross it out in some way or highlight it once you've completed it, just so you can see the notes that you went through as you go. And then you can go back to them if there's any questions about them and say, yeah, I've noted that and I've went over that and I've checked that item. So we're going to go back to the dividend income and interest income. We're going to say these are going to be in the K1 adjustments. So I'm going to go back to the 1120S. I'm going to go to page 3, and then we have the Schedule K here. And within the Schedule K, you'll note that we have the interest income and the dividends income. So we're going to say this is non-business basically related interest income. I'm going to jump to this item and say that we need an adjustment here. So I'm going to right click and I'm going to jump to the interest income. So I'm going to jump to the interest income, and there it is. Now in our notes, we said that the 6,000, some of it's going to be tax exempt, I believe. So if I go down to our notes down here for the interest income, we said that some of it, yeah, here it is. 4,000 of it is going to be exempt, tax exempt interest. Or let me correct that, 4,000 is non-tax exempt. So in other words, this isn't a tax exempt interest, would be something like investment in state or federal bonds typically, where you'd have that tax exemption. So therefore the 4,000 is going to be non-tax exempt. That's what we want to pick up here. So we're going to be saying that the 4,000 is going to be our adjustment for the interest. So I'm going to go back up top. I'm going to put in the 4,000 here. And then if I go back to the forms, there's the 4,000. Now we have that adjustment. What's that going to do to our bottom line? Well, if I go back to page 1, we're now at the 75,510. If I go to page 4, I'm going to ask, did this throw me out of balance at all? Because I don't see any change there. If I go back to page 4 on the Schedule L, you can see, okay, that threw me out of balance. Why? Because I've already included that income in the income line, and now it's making an M1 adjustment. So if I go back to the detail, where is it on the income statement? It should have changed the income statement. So I'm going to go to the income statement, and I'm going to go to the other income. That's where I put it. And you have the interest income of the 6,000 here. Now, instead of just deleting that now or making it 2,000, I'm going to mark down here. I'm going to say this is a Schedule K adjustment. I'm going to say Schedule K a adjustment, and I'm going to say negative 4,000 to take it out of there. And that way, if you review your own notes or give it to someone else, they'll be able to see that you put it in there and then took it out. And this is kind of like a journal entry that's happening, right? You're taking it out of the income statement, and the other side is now basically the M1 adjustment. So if I say okay, that should then put us back in balance, hopefully. If we go back to the forms, I'm going to say, okay, now we're back in balance. So we're back in balance there. And if I go back up to page 1 then, and scroll down, now we have a change to the net income, which is 71,510. So let's go back to our Excel worksheet and see if we can reflect that in Excel. We're going to have a tax entry then, and the tax entry is going to, this interest income is basically going to go down. So I'm going to say, all right, this interest income is going to go down. That's going to be a debit. That's a credit balance account. So we're going to debit it. And then we're going to credit. Where am I going to put it? What's the other side? Well, it's an M1 or Schedule K adjustment. So I'm going to put that down at the bottom here, and I'll show you how this works. I'm going to put it down here and say it's going to be a schedule interest income for the Schedule K. And then I'll put the amount, which was 4,000, like so. And then we can see how this basically works in a visual way with an Excel worksheet, a little bit more transparent. I'm going to record this in P23, and I'm going to record the debit, which will bring that down to 2,000. So that's what's left, 2,000, and we'll deal with that later. That's going to be the tax exempt portion. And then I'm going to go down here to the interest income on Schedule K. This is going to be where the other side is. And I'm going to scroll back up and say that this is going to be the credit. Now, how am I going to tie out then? Note that this is now the 71,100, the 71,510. If I double click on it, what's happening here is it's saying, hey, I'm including all of the income, everything below the capital, the sales and whatnot, but I'm not going to be including these adjustment items down below because that's where the adjustment is happening. So that's how the difference is happening here, right? We've got this one, which is including everything. I'm not going to have anything recorded down here, however, so you could still just record the upper portion. And then this is going to be including everything down to those adjustment items. And then, of course, the difference between the two will be those adjustment items. So now I can say, all right, there's the 71,510. I can go back here. There's the 71,510. I could then go to page 3. There's the 71,510. There's our adjustment for the 4,000. We can then go to page 4. And you see then at the bottom of page 4, we got the 75,510. So 75,510. There's that adjustment. That's the 4,000 is the adjustment. So that's going to start. The Schedule K adjustment starts at the 71,510, and then the adjustment is the Schedule K adjustments, which are going to be the blue items here that will reconcile to the 75,510. So I can reconcile there, and then I can go to my Schedule L to see if we're in balance. We're in balance here, so that looks good. And then I can go to the M1, and if I go up to the M1, let's see, we've got the 75,710. That's the book balance, 75,710, and that's reconciling out to the 75,510. So there's the 75,510 here. So you can kind of reconcile everything out. It'd be nice if you could just basically get those different income numbers and be able to work them in the worksheet. This is one way that you can basically work that out. Now I'm going to go ahead and say, all right, the interest income, we did that for now. I'm going to keep it yellow because we still have the exempt portion of the 2,000. I'm now going to go to the dividend. I'm going to do the similar process here. So I'm going to go back to the return. I'm going to say, okay, I think that's going to be an adjustment. Where's that going to go? I think it goes here on page 3 in the Schedule K. We have the ordinary dividends and the qualified. We're going to say they're all qualified as well. So I'm going to right click and jump to them. I'm going to go to the ordinary dividends and say that I believe all of these should be some type of adjustment of the 14,000. 14,000, they're all qualified dividends. And you can look at the definition of qualified dividends if you got questions about that. We're going to go back to the form. There they are here. So it's going to be an adjustment there. So again, if I go to the Schedule L, I say, what happened there? If I go to the Schedule L, am I in balance? No, now I'm out of balance. Now, and if I go to the page 1, it's still going to be in income because you'll recall I included it in income here. So now to get back in balance, I need to take it out of income. So I entered the M1 or the Schedule K adjustment. I got to remove the other side now. It's just a journal entry that's happening. You can think of it as a journal entry. The other side we put into the income, you'll recall, and that's going to be down here in other income. So here's the dividend income. It needs to go away for the tax purposes now on the page 1 of the 1120S. So once again, I'm going to say this is a Schedule K adjustment. I'm going to say negative 14,000. So you can see the journal entry, right? You can see the journal entry here. Here's one side of the journal entry. The other side's on the Schedule K adjustment. It's just a two-sided journal entry. I'm going to say OK, and then go back up to the forms, and that adjusts the income here. Let's first go to page 4 to see if it puts us back in balance. So here's the Schedule L. So that's good. It puts us back in balance. So the journal entry was recorded properly in the tax software, meaning it had one side on the Schedule L and the other side we recorded to the income side. So that looks good. Now let's see if we can tie out all of our income numbers. Page 1, we're going to say this is adjusted now. That looks good down to the 2,000 that's left for the income. That's going to be tax exempt income. And then we have the ordinary income, and we need to now reflect that in our Excel worksheet. So how are we going to do that? We're going to do another adjustment to this dividend income. So I'm going to remove it from the taxes, and I'm going to put it down there into this basically Schedule K adjustment, right? Same process, same process. We're going to go back over here, and I'm going to say, all right, this is a tax adjustment. I'm going to call it a tax adjustment. I'm going to say that this is equal to the dividend income is going to be debited to make it go down for 14,000. The other side is going to be a credit to the Schedule K type of adjustment, and that's going to be the credit for the 14,000. Posting this out then, I'm going to go over here into cell P22. P22 equals, I'm going to post the debit here, removing it. That makes it go down to 0. The other side then, go into the Schedule K. So Schedule K, we have the dividend income. I'm going to say this equals, and scroll back up, and we'll pick up the credit. There's the credit, and that'll bring it back up. So now let's see if we can tie everything out. Notice this goes down to 57,510 because we're picking up all of the income items, but excluding the exemption items down below, which are the Schedule K and the M1. So this 57,510 you would think would be on page 1. So there's the 57,510. That looks good. We're going to then go to page 3. There's the 57,510. That looks good. Then we're going to go to page 4. We got reconciled to the 75,510. So the 75,510 is going to be this item. So that starts with the 57,510, and then it picks up the Schedule K adjustments to get to the 75,510. And then I'm going to go back over here and say, all right, can I tie out to it? Is my Schedule L in balance? We're going to say, yeah, the Schedule L's in balance. These are taken care of. That's okay. And we're in balance here. These two numbers tie out. So that looks good. And then we're going to go to the M1. Starts at the 85,710. That's the book balance. There's the book balance. Ties out to the 75,510. 75,510 is here. So we can reconcile all those numbers out. So now I'm going to go back up top, and I'm going to say, all right, the dividend income, I can go ahead and make that unyellow it because we've done it. That's good. And then we're going to go to our information over here, dividend income. We can at least cross out the dividend income portion of it. We still have a bit of the interest income that we will address at a future presentation.